Former U.S. President Donald Trump, known for his pronouncements on global affairs, has expressed astonishment at Ghana's recent move to shake up its gold market. The West African nation, a significant player in the global gold industry, has banned foreign nationals from participating in its local gold trade. This bold move, aimed at wresting control of the precious metal and bolstering the national economy, has sent ripples across the world, with Trump's reaction highlighting the potential global implications. Ghana's decision, a dramatic shift in its gold trading policies, is rooted in a desire to reap greater benefits from its own resources. The move, while welcomed by some, has also sparked concerns about its impact on the local and international gold markets. As the world watches Ghana's golden gamble unfold, the question remains, will this move pave the way for a more equitable and sustainable gold trade, or will it trigger unintended consequences? In a move that has sent shockwaves through the global gold market, Ghana has officially barred foreign nationals from participating in its domestic gold trade. Effective immediately, foreign companies and individuals, even those previously licensed for gold export, are prohibited from trading in the local market. This sweeping ban aims to curb the influence of foreign entities in the country's gold sector and channel the flow of gold through a single, state-controlled entity. This decisive action by the Ghanaian government is unprecedented in the country's history. It marks a significant shift in policy, underscoring the government's determination to exert greater control over its valuable gold resources. The ban, while lauded by some as a necessary step towards economic independence, has also raised questions about its potential impact on the livelihoods of those who rely on the gold trade, both domestically and internationally. At the heart of Ghana's gold market shakeup lies Goldbod, the newly established government entity tasked with regulating the nation's gold trade. Goldbod, short for Ghana Gold Board, has been granted sole authority to buy, sell, assay, determine the purity of, and export artisanal gold. This centralized control over the gold trade is a cornerstone of Ghana's strategy to maximize its revenue from the precious metal. With a substantial injection of $279 million in government funding, Goldbod is mandated to purchase a minimum of 3 tons of gold per week from small-scale miners across the country. This ambitious target underscores the government's commitment to channeling the flow of gold through official channels, reducing leakages from smuggling, and ensuring that the nation benefits fully from its gold wealth. Goldbod's success or failure will be a key determinant of whether Ghana's gamble on gold pays off. Ghana's decision to overhaul its gold trade comes at a time when the country is grappling with significant economic challenges. As Africa's leading gold producer and the 6th largest globally, Ghana possesses vast gold reserves that have the potential to transform its economy. However, despite its golden riches, the nation faces persistent economic headwinds, including high living costs, currency fluctuations, and the pervasive issue of illegal gold mining, known locally as galamsey. In 2024, Ghana's gold exports surged by an impressive 53.2%, reaching a record $11.64 billion. This impressive growth, driven in part by soaring global gold prices, highlights the enormous economic potential of Ghana's gold sector. The government, recognizing this potential, aims to leverage Goldbod to further boost foreign exchange inflows, stabilize the Ghanaian CDI, the national currency, and ensure that the benefits of gold trickle down to ordinary citizens. Section 5. Foreigners out, locals in. Navigating the new gold trade landscape. The ban on foreign participation in Ghana's local gold market has sent shockwaves through the industry, particularly among foreign nationals heavily involved in the sector. This move, aimed at curbing illegal mining activities and promoting local ownership, has been met with mixed reactions. While some see it as a necessary step to protect Ghana's resources, others argue it could stifle the industry and lead to unintended economic consequences. Chinese nationals, known for their significant presence in Ghana's informal mining sector, are among those most affected by the new regulations. For years, they have been a driving force in the small-scale mining industry, often working in partnership with local miners. The new ban, however, has left many of them in a precarious position, unsure of their future in the country. The ban effectively cuts off their access to a significant source of gold, forcing them to reevaluate their operations in the country. Many are now considering relocating to other African nations with more favorable mining policies, while others are exploring legal avenues to challenge the ban. The ripple effects of this decision are being felt across the entire mining community. Local gold dealers, previously licensed to trade in the market, are also grappling with the implications of the ban. These dealers have long been the backbone of Ghana's gold trade, facilitating transactions between miners and international buyers. With their licenses revoked, they now face an uncertain future, as they must navigate the new regulatory landscape. Their licenses have been revoked, and they are now required to sell their gold exclusively to Goldbod. This new mandate aims to centralize gold trading and ensure that all transactions are transparent and above board. However, the transition has not been smooth, with many dealers expressing concerns about the fairness and efficiency of the new system. While the government has promised a grace period to facilitate a smooth transition, concerns linger about the potential disruption to their livelihoods and the capacity of Goldbod to absorb the vast quantities of gold previously traded through these channels. The success of this new policy will depend on the government's ability to address these concerns and ensure that the benefits of the new system are felt by all stakeholders in the gold trade. Section 6. Doubts and Solutions. Experts weigh in on Goldbod's future. The establishment of Goldbod and the ban on foreign participation in Ghana's gold trade have elicited mixed reactions from industry experts. While some see it as a bold move towards self-reliance and economic empowerment, others are skeptical about its feasibility and long-term impact on the industry. Kwaku Efa Asuahini, chairman of the Chamber of Bullion Traders Ghana, has voiced concerns about the government's capacity to purchase and manage the entire output of Ghana's artisanal gold miners. He points out that the logistical and financial challenges could be overwhelming for a newly established entity like Goldbod. He suggests that partnering with reputable foreign investors to purchase and export gold through Goldbod could alleviate some of the pressure on the newly formed entity. This collaboration, he argues, would not only bring in much-needed expertise and capital but also help in maintaining the quality and competitiveness of Ghana's gold in the international market. However, Nana Asante Krobea, a prominent mining governance consultant, holds a more optimistic view. He believes that the new law, if implemented effectively, has the potential to significantly bolster government revenue, reduce smuggling, and bring much-needed order to Ghana's often chaotic gold sector. According to him, the key lies in the government's commitment to transparency and accountability. He believes that the new law, if implemented effectively, has the potential to significantly bolster government revenue, reduce smuggling, and bring much-needed order to Ghana's often chaotic gold sector. According to him, the key lies in the government's commitment to transparency and accountability. By ensuring that all transactions are conducted openly and fairly, the government can build trust with local miners and other stakeholders. The success of Goldbod, he argues, hinges on its ability to establish transparency, build trust with local miners, and ensure fair pricing for their gold. If Goldbod can achieve these goals, it could transform Ghana's gold industry, making it more sustainable and beneficial for all parties involved. The future of Goldbod remains uncertain, but with the right strategies and partnerships, it has the potential to become a game-changer in the global gold market. Section 7. A Golden Opportunity, Combating Illegal Mining and Environmental Damage. Ghana's crackdown on foreign involvement in its gold trade is not just about economics, it's also about the environment. The lush forests and pristine rivers of Ghana have long been a source of national pride and a vital resource for its people. However, the rise of illegal mining activities has put these natural treasures at grave risk. Illegal mining, or galamsey, as it's known locally, has ravaged Ghana's landscape, leaving a trail of environmental destruction in its wake. These operations are often unregulated and conducted without any regard for environmental laws, leading to severe deforestation and soil erosion. The once fertile lands are now barren, and the local communities that depend on these lands for agriculture are left struggling. This illicit activity, often fueled by foreign actors, has polluted over 60% of Ghana's water bodies with toxic chemicals like mercury, posing a severe threat to human health and ecosystems. Mercury, used in the gold extraction process, seeps into rivers and streams, contaminating the water supply and entering the food chain. This not only affects aquatic life but also the health of the people who rely on these water sources for drinking and irrigation. The government's move to restrict gold trading to Goldbod is seen as a crucial step toward combating this environmental scourge. By centralizing gold trading, the government aims to monitor and regulate the flow of gold more effectively. This initiative is part of a broader strategy to ensure that gold mining activities are conducted responsibly and sustainably. By channeling gold purchases through a single entity, the government aims to make it more difficult for illegal miners to sell their gold, choking off their revenue streams and disincentivizing this destructive practice. This measure is expected to reduce the financial allure of illegal mining, making it less attractive for those who engage in it purely for profit. This crackdown on illegal mining fulfills a key campaign promise of President Mahama, demonstrating the government's commitment to environmental protection. the administration has also launched several initiatives aimed at rehabilitating the damaged landscapes. These efforts include reforestation projects and the restoration of polluted water bodies, aiming to bring back the natural beauty and ecological balance of the affected areas. The government's actions are a testament to its dedication to preserving Ghana's environment for future generations. Section 8. Global Gold Rush. Ghana's impact on the world stage. Ghana's bold move to reshape its gold market comes at a time of heightened global interest in the precious metal. Gold prices have been on an upward trajectory, recently surging above $3,200 per ounce, driven by a confluence of factors, including geopolitical tensions, particularly the ongoing trade war between the United States and China. As investors seek safe havens for their assets, gold has emerged as a favored choice, further fueling demand and pushing prices higher. Ghana's decision to nationalize its gold trade could have ripple effects on the global gold market. By tightening control over its exports and potentially limiting supply, Ghana could influence global gold prices, especially if other gold-producing nations follow suit. This move has the potential to reshape the dynamics of the global gold trade, with implications for investors, central banks, and jewelry industries worldwide.